Hi everyone, welcome back. Some investors may worry about the stock market sinking after the recession is officially announced, but history shows that the markets incorporate expectations ahead of the economic reports. In 2008, global financial crisis, the US recession spanned from December 2007 to May 2009, but the official recession announcement came in December 2008, a year after the recession had started. By then, stock prices had already dropped more than 40%. Although the recession ended in May 2009, the end of the recession announcement came 16 months later, September 2010. US stocks had started rebounding before the recession was over and climbing through the official announcement. The market is constantly processing new information, pricing in expectations for companies and economy. Investors who look beyond after the fact headlines and stick to a plan are better positioned for long-term success.
Good morning, everyone. This is Rob McDougall from Zhang Financial with your weekly economic update. Today is Monday, January 23rd. So last week, as this week, plenty of economic data that's out, a lot of impactful data points. Last week, we'll start off with that. Last week, we had some inflation numbers, retail sales, and some housing metrics. Just in general, what we're seeing is it appears that the U.S. GDP economic activity started the fourth quarter of 2022 strong, and it appears that it faded going on through the fourth quarter into 2023. Largely, I would have to assume a product of the Fed funds rate increases that were put through last year. So in terms of inflation, we're definitely seeing an aggressive move down, a steady move down. That's great. Last Wednesday, we had the December PPI, Producer Price Index, month over month. That came in much better than expected, a negative 0.5%. The expectation was a negative 0.1%. The core PPI came out the same day, Wednesday. It was exactly as expected, which was a positive 0.1%. Also on Wednesday, December retail sales, that came in lower than expected. Now it sounds negative, but that's actually a positive, so less pressure hopefully on future inflation. December retail sales came in at a negative 1.1% versus expectations of a negative 0.8%. The retail sales ex-auto, that came in less than expected at a negative 1.1. Expectations had been a negative 0.5%. In terms of the housing metrics we got last week, on Thursday we had housing starts that came in. Housing starts came in a little bit better than expected at 1,382,000. Expectation had been 1,355,000, but that was also down again. It was down from November, it was down from October, so we've had 5 straight months of it being down. In terms of building permits, this was expected to be better than the month before. It didn't come in that way. We had mentioned that last week. So the actual for building permits came in at 1,330,000. The consensus was 1,370,000. Then on Friday, we got the December existing home sales came in at 4.02 million versus a consensus of 3.96 million. So slightly better on existing home sales, but the trend here, if you see the chart, horrible. It has been down consistently since February of 2022. In terms of economic activity and the Atlanta Federal Reserve's expectation for fourth quarter GDP growth, as I mentioned, it looks like GDP activity did slow going into the end of the fourth quarter. The Atlanta Federal Reserve did take down their estimate for the fourth quarter. They had been at a 4.1% GDP increase, real GDP. They took that down to 3.5%. Inflation expectations based on the 10-year break-even that we always cite was up just slightly last week, 5 basis points, came in at 2.23%. Now, next week is the Federal Reserve Open Market Committee meeting. On Wednesday, they'll announce their rate increase. The probability of a 25 basis point increase, almost a near certainty, to 99.8%, so 0.2% of no change. So almost a complete certainty of a 25 basis point hike next week. Now, expectations for the rest of the year. Actually, there's a better than even odds built into the Fed Fund future pricing right now that that rate increase that we'll see next week, that will be reversed by the end of the year. So 54% chance that Fed Fund rate at the end of this year will be where it's at right now, which is a targeted zone of 425 basis points to 450 basis points. Last thing I want to talk about is earnings, S&P earnings. Very critical for the stock market this year to see S&P earnings hold up. Now, we expect fourth quarter earnings were down. So far, we've only had 11% of the S&P report earnings. A little disappointing to date so far. Small data point, mostly financials, but it is a little disappointing. So out of that 11% of the S&P 500 that is reported, 67% have beat estimates. That's below the 5-year average of 77% and the 10-year average of 73%. So the expectation now, based on those 11% of the S&P companies that have reported earnings, that the full quarter S&P earnings will be down 4.6%. Just last week, that estimate was 3.2%. So consensus estimates are falling for fourth quarter earnings. And as it stands right now, again, the fourth quarter earnings expectation is a negative 4.6%. So the returns last week, the index returns based on the economic data that we just discussed, not a lot of movement. The S&P 500 was down slightly, down 65 basis points. The international markets were actually flat, so international equities outperformed slightly. Within the U.S. equity markets, growth beat value. That's been the case so far this year. Growth was a positive 0.7%. Value was down almost 2% for the week, and that for the year, growth is up 6.5%, value up, but up 2.1%. Fixed income, not much change. The 2-year yield was down 2 basis points. The 10-year yield was down 3 basis points. So the U.S. aggregate bond index up slightly last week, 0.15% positive. This week, the big economic data that's coming out, GDP, as I referenced earlier. So GDP expectations, I told you what the Atlanta Fed expected, positive 3.5. The consensus expectation is a positive 2.6, so that'll be released on Thursday. Also on Thursday, we're going to get December new home sales. The expectation is 614,000. That'll be down from November's 640,000. Friday, a couple of big data points. Personal income, that is expected to be up 0.2%. That was up a positive 0.4% in November, so that would be a decrease. Also, personal spending expected to be weaker, expected to come in at negative 0.1. In November, that was a positive 0.1%. Also, on the inflation side, these are very important metrics. The December personal consumption expenditure and PCE core, these are the inflation measures that the Federal Reserve uses more than CPI in policymaking. So that is the PCE is expected to come in at 5.1%. That's a consensus. In November, that came in at positive 0.5 or 5.5%. PCE core is also expected to be down only slightly, expected to come in at a positive 4.6% year over year versus 4.7% in November. So that is a wrap for the economic news for this week. Thank you very much for attending. We'll look forward to seeing you next week. Thank you.